Let me start where polite research notes usually refuse to start. If you're still holding Recursion Pharmaceuticals Inc. into this week, you are walking into a math problem that can turn into a trap. The market is not debating whether AI drug discovery is a big idea. It is debating whether this company's most watchable clinical signal is real or an early mirage that destroys capital twice, first through hope, then through dilution. Here is what the tape already told you. The US regular session on December 1st, 2025 ended with RXRX around $4 per share, about $4.4, down roughly 6% on the day. Before the market opened on December 2nd, 2025, it rebounded to about $4 in pre-market trading. That is not a trend. It is a negotiation, and it is happening near the bottom of the roughly 3.8 to 12.4 52-week range. When a clinical stage biotech is pinned near its low, the market is not rewarding storytelling. It is charging rent for uncertainty. Now the fundamentals, because this is where investors feel it. Recursion Pharmaceuticals Inc. is a US-based NASDAQ-listed clinical stage biotechnology company. Clinical stage means the key assets are not approved products with predictable cash flows, so value is dominated by probabilities, clinical success, regulatory approval, commercialization, and the ability to finance the journey without crushing shareholders. Recursion calls itself tech bio, aiming to industrialize discovery by scaling wet lab experiments with automation and data science, then using computation to map biology and chemistry into drug candidates. But discovery efficiency only matters if it becomes clinical truth, and the financial reality makes clinical truth non-negotiable. Trailing revenue is about $44 million. Trailing net income is about negative $716 million. EPS is about negative 1.8. Market cap is about $2.3 billion, with about 521 million shares outstanding. Losses are large, revenue is small, and the market is funding probability, not profits. That is why investors are anxious. When burn is heavy and price is near the low end of the range, shareholders are betting on time before dilution, time before sentiment turns, time before patience runs out. That brings us to the catalyst that matters. On December 1st, 2025, Recursion announced a webinar on December 8th, 2025 for a Tupelo Phase 1b/2 readout of Rec 4881 in familial adenomatous polyposis, FAP. Phase 1b/2 compresses the normal stepwise path, Phase 1 for safety and dosing, Phase 2 for efficacy signals, Phase 3 for confirmation. The benefit is faster learning. The risk is that small early samples can look great on central tendency, then unravel as more patients reveal real heterogeneity. And this is the real mystery, biological and statistical, tied directly to fundamentals. In May 2025, tied to Digestive Disease Week 2025, Recursion discussed preliminary Tupelo results. In 6 efficacy evaluable patients, the median reduction in polyp burden at week 13 was about 43%. But the same dataset included a line that refuses to behave. One patient showed a 595% increase at week 13. That is not a small miss. It is an outlier with structural implications. Because outliers are not automatically damning, but they are never free. They demand explanation, and that explanation is where markets decide whether volatility is noise or biology. If it is noise, measurement variability, procedural inconsistency, baseline differences, localized disease patterns inflating the metric, then the story can survive. If it is biology, responders and non-responders driven by factors the company cannot identify or control, then the probability weighted value changes, and in early stage biotech, probability weighted value is the stock. Recursion tried to manage part of this through design and safety framing. In the May 2025 update, adverse events were described as mostly grade 1 and grade 2, with some grade 3 and no grade 4 events reported at that time. Early safety can look manageable in small samples, then the true tolerability profile emerges as patient counts and exposure time increase. That is why early safety is a preliminary map, not a guarantee. Recursion also adjusted enrollment criteria by raising the minimum age to mitigate MEK inhibitor-associated adverse events. Investors can read that as competence, tightening criteria to improve benefit-risk balance or fragility, a sign the therapeutic window is narrow and must be engineered to stay acceptable. Either way, it reinforces that December 8, 2025 is about more than whether Rec 4881 works. It is about whether the regimen is stable and scalable. Now tighten the plot with governance. On November 5th, 2025, Recursion announced a CEO transition. Co-founder CEO Chris Gibson to Chairman Nahat Khan to become CEO and President effective January 1st, 2026. Leadership transitions around catalysts can shape framing, prioritization, and risk communication. Not a mystery of timing, but an uncertainty of interpretation that feeds directly into valuation, especially if the December 8th, 2025 update is ambiguous. Underneath it all is the cash and burn equation. In late 2025, losses remain significant, and some summaries point to runway projections extending into 2027 under operating assumptions. Investors obsess over how durable that runway is and how sensitive it is to trial expansion, pipeline priorities, and partnership revenue volatility, because that determines whether inflection points can be reached without dilutive financing. Near the lower end of the 52-week range, dilution risk becomes a price-level fear. So by the pre-market of December 2nd, 2025, the setup is clear. Low price, meaningful market cap, heavy losses, a catalyst calendar pointing to December 8th, 2025, and a prior snapshot that creates both hope and hesitation. A 43% median reduction at week 13 in 6 patients, paired with a 595% increase in 1 patient. You can feel the fork in the road. The bull case is that the May 2025 signal expands with more data, the median holds, variability becomes interpretable, safety remains manageable, and the company credibly argues Rec 4881 is doing something real in FAP. In that world, a stock around $4 is not just cheap. It is mispriced versus rising probability, and mispricing attracts capital. The bear case is that as the dataset grows, the signal weakens, variance grows, the outlier looks less like an anomaly and more like a warning, or tolerability limits tighten enough to raise questions about feasibility. In that world, the market removes the premium for possibility. The stock falls not because investors are emotional, but because the discount rate rises and the probability-weighted asset value falls. That is why the most important mystery here is not whether AI makes for a compelling story. It is whether biology yields a clean, reproducible signal in humans. December 8th, 2025 is when the mystery gets fewer hiding places. Investors will listen for patient counts, response consistency, handling of variability, durability signals, and the quality of the causal story, why it should work, for whom, and under what conditions. Now the trading framework, anchored to the numbers we have. With price around $4.4 at the December 1st, 2025 close and about 4.5s in the December 2nd, 2025 pre-market, the clearest structural reference is the 52-week low around 3.8. That level is memory, where pessimism was recently priced. If the stock loses it decisively, it signals repricing of probability downward, and recovery tends to require a stronger new data point or strategic shift. On the upside, the 52-week high around $12.4 is a reminder of what the market once paid for the story. It is not a straight line target, but it frames the scale of potential re-rating if December 8th, 2025 materially improves confidence in Rec 4881 and in Recursion's ability to translate its platform into clinical outcomes. So think in scenarios. In the short term, into and right after December 8th, 2025, this is event risk territory and the stock can gap. Treat 3.8 as the downside reference and the 4.4 to 4 to 4.5 zone as the decision area. A strengthened readout can justify higher probability and a new range above the low $4 area. A disappointing or muddier update pushes the market toward testing 3.8 again. In the medium term, weeks to months after December 8, 2025, focus on follow-through, next step trial plans, regulatory clarity, and consistent messaging through the leadership transition effective January 1st, 2026. Headline spikes fade without execution. Mixed data can stabilize with strong execution. In the long term, 1 year and beyond, the case hinges on whether Recursion can repeatedly turn the TechBio promise into assets that progress credibly through clinical stages without collapsing under burn and dilution. Public markets eventually demand products, approvals, or at least late-stage probability. If that translation succeeds, prior highs like 12.4 become relevant reference points again. If not, market cap becomes a ceiling. As of the pre-market of December 2nd, 2025, the narrative is in a holding pattern, a preliminary signal that excites investors and an outlier that refuses to be ignored. The next leg depends on whether December 8th, 2025 turns uncertainty into clarity, whether the mystery resolves into a thesis or fractures into doubt. Before we wrap, help steer what we investigate next. If there is a stock or coin you want us to dig into, listed, private, or planning to list, leave your tip in the comments. Tell us the ticker or name, what you think the market is missing, and what catalyst you believe will force the truth into the open. And if you made it this far, thank you. I appreciate every listener who watches through the uncomfortable parts, subscribes, hits like, leaves a comment, and shares these episodes outside this platform. That support is what lets us go deeper and come back with better work that respects your time and your capital. This was ValueStir.